PPI inflation just came in at a miss. It is hotter than expected, 0.7% versus the 0.4% expected. Excluding food and energy, it's 0.5 versus 0.2 expected. This is a major hot reading on the inflation figure, and further backs up the CPI reading that we had last week. Now, this now means inflation is proving to be rather sticky and entrenched, and this is going to put a bunch of fears in the market. Let's get the immediate reaction from the market, because we can see here that the pre-market is falling. Initially it took a little while, but it is starting to fall now. Nasdaq down 1.4% on the futures, S&P down over 1%, and the Dow nearly giving up 1% here in the pre-market. Bitcoin was having a nice day today, up towards that 24,800 level, trying to make a break for 25,000, and now is just pulling back. Still green on the day, but only 0.4% in the green versus 2% roughly. Now, if we jump on over to the minute by minute, you can see exactly how this played out. Where my cursor is when the news came out. Initially, markets ignored it, but it turned out this was traders trading the move, and now we've seen a correction to the downside, both on Bitcoin and on the S&P here on the right side as well. A big fall to the downside post these figures. So if we take a look at the Fed rate monitor tool, you can see that the markets have now adjusted this reading. This was at 9% yesterday. This is now ticked up to 15%. More and more the market, just slightly now, are starting to price in the possibility of a 50 basis point hike at the next meeting on March the 22nd. Now, this is an interesting moment because you've got a mixed dynamic going on. You've got some of the market, which is like, let's ignore this. January is generally hot. The Fed even came out to say there's a lot of seasonal adjustments going through on January, so you can expect to see some hot figures. But on the other hand, you've got people who are thinking, hang on, this is worrying. This is a sign that we could have entrenched inflation, and that a chunk of this 6% or so of inflation that we've got could be entrenched and really sticky, which will need higher rate hikes and to keep the rate hikes for longer to get rid of it, potentially driving the economy into recession. The other side of the spectrum is saying, hang on a second, we're not too bothered. We want to get in this market because inflation's eventually going to taper down, and we've seen the job market's been pretty healthy. People are still spending. We saw the retail figures coming in yesterday. People are still spending, right? So earnings per share for companies should be still strong. We could avoid a recession. So you've got this interesting narrative going on. And on top of that, crypto just seems to be doing what it wants here on the macro. I mean, if we jump out to the daily chart here, you can see here that Bitcoin is just deciding to do what it wants. Now, do I think this can sustain? No, I think we need to be very careful. A lot of people are now FOMOing in, getting really excited. Remember, markets have a real bad habit of over-sensationalizing, right? When things are good, super excited, we want to go to the moon, so exciting, Bitcoin to 100,000. I've already seen articles today saying Bitcoin's going to 50,000, right? Because it gets clicks, it gets views, people like it. And then when it's going down, oh, Bitcoin's going to 8,000. There's no rationality, there's no level head, calm mind. And that's what we're trying to bring here. We've enjoyed this move. I've shared with you guys what this move is on the weekly chart. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on Skillshare. For those who aren't familiar, Skillshare is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days if you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. Let's bring out Amy Ribbon. I'm going to keep banging the drum on this, guys, because let the other channels FOMO you out, but I'm going to keep giving you the sense of reasonality here that we're in. What we had this week is no mean feat. This is a very good candle here. Don't deny that. We're not being bearish here. We're enjoying it. I'm in the market. But we still, and I know this is crazy, we're still in a bear market rally, but the odds are in our favor now. Things are looking good and we can clear it. Now, what have I always maintained? I've always maintained that for me personally, different people have different structures of doing this. Each trader, each investor will have their own way of forming their ideas. But for me, I want to see this weekly EMA ribbon reclaimed, with a confirmation candle thereafter. We need to be above 25,400 on our weekly close for the bears to finally be done on this bear trend, and then we can move into a sideways trend. Not straight into a bull trend, into a sideways trend. So this is great what's happened. From here, all the way down at the 17,000s, we rallied into our EMA ribbon. The bears turned up, they gave 2 weeks of strength, and we turned back up here this week with a bullish engulfing candle. But remember, if we give up all these gains this week over the next 3 days, this weekly candle still has 3 days to go. If that happens, then this will not be a bullish engulfing candle, and the bears could step back up and try to push us down. So we're not out of the woods yet. There's still some work to do, but it is looking good. And the reason it's looking good is if you drop down to the daily chart, what do you see? You see this. A couple of days ago, what was I saying? This is fine if we test our EMA ribbon. I kept saying that. That's healthy. When you've had a big move like this, I don't mind a consolidation, and I definitely don't mind a move into your EMA ribbon. Produces a good opportunity to buy the dip, and it's healthy for the price action. You've locked in a price. You've proven to the bears that this wasn't just luck and momentum and greed and manipulation. No, we earned this price level. This price level at 21, 22,000 is locked in. That's good. Then what was important was going and getting that higher high, because you got rejected. Bitcoin got rejected here at 24,200. So we had to, when bouncing from this EMA ribbon, get a higher high. And we unlocked that. And that's what I tweeted last night. We did an impromptu live stream as well. Shout out to you guys who joined that. Smash up the likes and comment if you were in that live stream yesterday. And that's why this is a good move here. And today even, running up to 24,900 roughly, amazing move. We've definitely got a higher high here. So even if we wanted to come down now here on Bitcoin, even if it wants to come back down here and then turn around again, this is good. We can slowly start uptrending, reclaim 24,000, reclaim 25,000. And then there's a really interesting gap for us to fill. Right? Because once we clear these levels, why is this such an important level? I mentioned from here, dating all the way back to August of 2022, after the Terra Luna collapse, we fell to 17,600. Then we rallied to this 25,000 region, heavily rejected, right? That started the fall that eventually led to our lows. But now we've got to reclaim this level. And that is literally what Bitcoin is trying to do right now. It's trying its best to reclaim that level. You can see where we're at now. And if we can clear this volume in this area, things really do start to get exciting. Let me show you on the VPVR how interesting it gets after this. So look at this. Look at the level we're at. Look at the volume we've got above my head right here. Loads of volume being traded here. But once you clear this level, look how thinly traded the volume becomes. And that is because we dropped here so quickly. When we fell here from the 30,000 period all the way down to 17,600, we did so rapidly because it was due to the Terra Luna situation. So similarly, we should be able to fill that gap nice and quickly as well. So in the bullish sense, if we're able to close the EMA ribbon above that 25,000 level, fantastic. I'm super bullish about a move up towards 30,000. But we have to be wary that the bears still own the weekly trend. And until then, we have to give respect to them and be prepared for some further lows just in case. I don't think we're going to get new lows, but we could rotate down slightly just as the bears continue to show a little bit of strength, have their final battle before the bulls finally earn the next move up. Now, let's take a look at the dollar index. Remember, the dollar index has historically been inversely correlated to crypto, but crypto's decided to do its own thing over the last period. I mean, if you look at the dollar index here, over the last set of days here, call that 10 days there, it's up 3%, which would suggest Bitcoin should be down a decent amount over that period. But it's not. Bitcoin's continued to do its thing. It's decoupling a little bit. It's saying, you know what? People just want to get in this market right now. They do not want to miss the move for Bitcoin up into the 30,000s, and they want to get in the market. That is why they're taking that kind of behavior to ignore the market trend and just allocate their positions. They don't want their cash sat on the sidelines. Now look at what the dollar index is doing. It's running past its EMA ribbon, and this is where it starts to get worrying. And this PPI inflation report is not going to help. Remember, PPI inflation coming hot is good for the dollar, and this dollar is showing a little bit of strength today. I would have thought it would do better, in fact. It's only up 0.15%, but that's enough for it to try close its daily EMA ribbon back bullish again. This is not good. You need the bears to step back up, and we need this dollar index to fall to the downside. Similarly, the US 10-year yield up 0.76%. Again, this is a sign that risk is rotating slightly off because of the bad PPI number. Another important note is this move currently is Bitcoin led. To put this into perspective, take a look at Phantom right here. Phantom is showing a red candlestick today, down 2%. You've got Avalanche down 2.4%. Major altcoins, Cardano down almost 5% today. Solana down 2.4%. Cosmos down 3.2%. All coins are in the red today. Even Render down 4%, right? Coins are down today apart from Bitcoin, which is trying to hold the day green. Now, chances are by the time I upload this video, Bitcoin might rotate red slightly on the day, and that's perfectly fine as well. I do not mind a retest here of Bitcoin to back test these levels. If I bring up the lines again, don't worry if Bitcoin wants to retest this 24,000 level, that's perfectly fine. In fact, even if it really wanted to come test its EMA ribbon, try its luck around 23,500, we'll be okay, right? It's okay to test your EMA ribbon. I think we've learned that by now. It's okay to come in and test our EMA ribbon. That's not an issue whatsoever. So if it wants to come down to those levels, that's great. I'd like to see a retest of 24, a bounce before we could try go get another attack at 25. But this PPI reading is not going to help. So coming back to altcoins are behind the trend right now because this move is being led by Bitcoin. Bitcoin dominance is up 0.7%, and you can see Phantom here as an example. It's still not achieved its previous peak. Okay, that's going to be the next leg. When Bitcoin's had its move and it's time for the altcoins to move, expect your favorite altcoins to try beat its previous peak. Bitcoin's done it, right? Let's just switch that back over to Bitcoin. Bitcoin has just gone past its previous peak. We can see that. That was 24,000. It's created a higher high. Now the altcoins will need to follow suit. So you need to see Phantom, for example, above 65 cents. You need to see Avalanche, if you like Avalanche, above that level there at 22. If you're following Polygon Matic, that's already got its higher high. Great move here, up 3% against the trend today. And you can see the strength in the market. Cardano, again, already got its higher high, but it's pulling back slightly today. If you're looking at a project like, let's take a look at Optimism, it needs to go back above this previous high at 3.2, right? That's what these coins need to be doing right now. Let's take a look at Metis, up 9% on the day, pulling back a little bit here with the wider market. But I mean, this is crazy, right? If you look at this crazy candlestick it's had today, at one point here on this candle is up 19% on the day. And this is a video we spoke about. I'll link the video up here so you guys can go see. Weeks ago, I made a video about Metis and it being a great layer 2 solution, one which I'm looking at. So hopefully you guys took advantage of that. It's an interesting time to be in the market, and now is the time which requires a rational brain. A lot of people will be telling you this is fine, we're going to a moon. A lot of people will be telling you this is a huge bear trap, and the inflation data seems to provide you this middle ground of confusing data which just does not make sense. We were provided this narrative that inflation was starting to come down. Jerome Powell came out and said the disinflationary process has started. Then we get a hot January across the board. Retail sales, labor figures, CPI, and now PPI to add to the book of bad macroeconomic reads this year. But so far, markets seem to be shrugging it off. But for how long can they shrug it off? Because the reality is we do not know whether this inflation is transitory, whether it's entrenched, whether it's sticky, and that's going to be the key theme going into Q2 and for the rest of this quarter as well. Like I said, this was always going to be a volatile Q1 and Q2 of 2023. Anybody who tells you otherwise doesn't understand the situation we're in. We're trying to soft land an aeroplane in the midst of a huge storm. That is what's going on right now. So sometimes you're going to feel like, yes, we're about to land. Other moments you're like, oh, we need to go around. It's going to be a crazy period. You need to stay level-headed, be data-led. Don't be in one super camp of, oh, we're going to the moon. Don't be in the other camp of, oh, we're doomed. Try to stay level-headed in the middle band, follow the data, and adapt with it. Hope you guys enjoyed this video. If you appreciate this type of content, timely, with the data that matters, fundamentals, plus technicals, with some other stuff sprinkled on top, smash the likes. Don't forget to subscribe. Go watch this Ethereum Shanghai upgrade video here, because it's really important if you hold any Ethereum that you know exactly what's going on. And I'll see you in the next one.